Let's get the latest employment numbers now. They're due to be released in about 40 seconds from now. Ross Greenwood is with me. And another indicator, Ross, ahead of that rates meeting after the election, but no doubt feeds into the campaign as well.
Well, it sure does, doesn't it, really? Because one of the things that the government is relying on is forecasts into the budget of 4.25% unemployment over the next 4 years. If, say, for example, a global economic downturn, and many people are suggesting that right now, were come to fruition, then that could have a significant impact on the budget, on the debts and deficits that Australia's got, and even then the ability to hand out tax cuts, as both sides are promising now. As you say, we're waiting on these numbers to drop. The current rate is 4.1%. The forecast from economists is 4.2%, and the unemployment rate is steady at 4.1% for the previous month. We'll get a few other reasons and have a look at what's taken place around the place. But just to say that Australia's run of very strong employment numbers does continue. Now, this is frankly good news for Australians and good news for Australia as an economy. The reason for that is people in jobs means they can manage with the cost of living stresses that are around the place at the moment. Of course, people without jobs find it much more difficult. The second thing is it's good for Australia's economy. And the reason for that is because more people working also means that there are more people paying taxes, with the government getting around 50% of its total revenues from PAYG workers. So here's the unemployment rate sitting at 4.1% in March, the previous number at 4.1%. Really, this also picks up a little bit is that after the Christmas holidays, you tend to find that employment figures do pick up. And the reason for that is broadly because many people leave the workforce during the Christmas period. Casual workers in particular, they rejoin the workforce, and that's the reason why sometimes these numbers do improve from there. So just having a look at this, we'll see the number of new jobs that have also been created in the next little while. And then we can go on and show you some other bits and pieces here. But the one thing also is it will play out pretty well. Here's the long-term run of unemployment. So just going back to February last year, look, it's been remarkably stable. This is good news. This is, if you're really talking about the government and Jim Chalmers, if they've got a message to sell, it's this one. This is the best economic number that Australia has got right now, and it's the reason why people cope. And it's also another reason why perhaps there's a less imperative for the Reserve Bank to move on interest rates.
Yes, so that's what I wanted to ask you in that, as you look at that incredible, consistency there on the unemployment rate, we've been talking about the prospect of rate cuts, some saying 4, maybe 5 by the end of the year, given the volatility internationally. What's the read now, and how does this figure feed into it?
Well, the interesting thing about this, Kieran, is in the past few days, and certainly as international markets have been rolling all over the place, the chance of not 1 but 2 interest rate cuts, in other words, a 0.5% interest rate cut at that meeting that you're talking about, which is after the election, is now becoming greater. So say, for example, at one stage there was pretty much a 100% chance of a 0.25% rate cut. That's still there. But the second thing is now the chance of a 0.5% rate cut has increased to around 30%. Now, we might be able to show you just a few of the numbers around this, some of the market forecasts right now, plus also just how markets are reacting to this. So here's the budget unemployment forecast that I was telling you about earlier. So you can see that 4% was last year, the last financial year. This financial year, the forecast is 4.25%, and that is steady going straight out. The unemployment rate of 4.1% right now really is a terrific thing. It means, again, the government's going to have more money in its budget. Aussie dollar, a little lower. Maybe that's suggesting because these are better than expected, maybe it just eases off the prospect of those 2 interest rate cuts at the next Reserve Bank meeting. If we go and have a look further forward, we can see some of the other bits and pieces. Have a look at this. Bond yields have increased a little bit on money markets since that number has come out. Again, suggesting maybe there is not as much urgency for the Reserve Bank to cut really hard. Stock market, still pretty strong, and that is surprising given the fact that there were big falls on Wall Street overnight. So again, this is showing resilience in Australia's economy right now, and they are borne out by those very strong employment numbers that we have just seen.
Ross, thank you.